What's good, everybody? Today we're going to be talking about how to build credit with a credit card. And why is that important? Because you can shoot yourself in the foot with a credit card really easily. So let me make sure that I put you on the right pathway to do it the right way so that you don't end up taking longer to see improvement in your credit than what you really have to. Now, if you don't know me, I'm Will Frazier, your credit and business expert. And if you like to hear information about improving your personal credit, obtaining accounts for your personal credit like credit cards and loans, as well as getting funding for your business with loans and credit cards and different business strategies to grow your business, then make sure you put a thumbs up on this video to like it, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I drop just like this one. Now, again, we're going to be talking about the best ways to build credit using a credit card. So why am I talking about building credit with a credit card versus other options that are out there like a loan? So the reason why this is going to be important for you, again, is going to be you might be trying to get a house. You might be trying to get a new car. You might be trying to do something like business funding, and your credit score may be stuck at a low place. You really need to improve it, and you're trying to build credit as a means of trying to improve your credit score. And it's very possible to do this in the wrong way and end up taking your score down lower or not helping your score to grow at all. So it's important to make sure that you're doing this the right way so that you don't mess yourself up. So if you're in that situation right now, I'm pretty sure you're feeling what I'm saying. So this is gonna really help you out. Now, the first thing that you need to know is that if you have a bunch of negative stuff on your credit report, such as late payments that are recent, like within last year or two, if you have collections on your credit report, if you have charge-offs on your credit report, these could be, medical bills, what I'm talking about with collections, cell phone bills, cable bills. You can have a repossession, which is a charge-off. You can have an apartment complex on your credit. All these things can be affecting your credit in a negative way. And if you have all of that stuff on your credit and you're merely trying to get an account and start paying it on time and thinking that that's going to override that negative stuff that's still sitting there, I'm just letting you know now that you're not going to really get anywhere. You might see a slow, if any, increase in your credit every month, and by the time it's time for you to be hitting your goal and getting what you were trying to get, you're probably not going to be able to get it because you still didn't deal with that negative stuff on your credit. So just know that building credit and getting an account and paying it on time, no matter who told you to do that, it's not going to help you. It's not going to be the saving grace. You're still going to have to deal with that negative stuff before you start doing this process or while you're doing this process. And if you have questions on, different things with your credit in regards to building credit beyond what I'm saying here or working on your credit, like dealing with those negative items, I have a free ebook down in the description called The Top Credit Questions. Make sure you check that out. Click the link down there. It's free. You can download it, read it, and get the insight that you need to try to help you with those negative items. Now, besides the negative accounts on your credit, which hopefully you're going to be dealing with now, you also need to know the best types of accounts to use to build credit with. Now, with this, you really have two options. You have loans and you have credit cards. Now, I'm going to go ahead and tell you that a credit card is going to be the best and fastest option to go ahead and build your credit with. In some situations, loans can be beneficial too, but the most universal, helpful, and beneficial tool to use to build credit is going to be a credit card. Now, when it comes to getting an authorized user account, like paying for a trade line from a person that you don't know, and then you're paying the money to add them on to add you on as a authorized user on their account, I don't really recommend those. But getting an account that you own yourself, that you have control over, and that you won't lose access to later is the best option to go to try to build credit. So get your own accounts, build credit that'll be permanent to you, that you don't have to pay somebody else for. Now, the reason why the credit card is going to help you more than the loan is basically because of how they hit your credit report and a few other reasons. So when a loan hits your credit report, it shows up as a whole bunch of debt owed. So there's a portion of your credit which is calculated based off of the amount of debt that you owe, and that's about 30% of your credit score. So with you having something pop up on your credit showing that you owe a whole bunch of money, that's not going to be ideally the best thing that you want to show up on your credit when you're trying to build credit, because you're getting the account to try to build up good payment history more than likely, but the other aspects of the account affect you as well. Now, with the credit card, it shows up as you have a credit limit of whatever it is, $500, $1,000 available to you with no balance. So basically, it's showing up that you have a whole bunch of money available to you. When that gets added into that calculation at 30% of how much you owe, that actually gives you a benefit versus a negative effect of having a whole bunch of debt owed. So that's why as soon as a credit card hits your credit report, what I've seen is people get anywhere from 30 points, 50 points, 90 points I've seen just from obtaining a credit card where they had not had one at all before. So that is one of the major reasons why the credit card is going to be more beneficial. And as soon as that hits your credit report, which is usually 30 to sometimes 60 days after you've applied, that gives you the quickest benefit that you can see in regards to anything hitting your credit report. Now, of course, when it comes down to using the credit card, you want to pay it on time. That's, the easy thing to know. I don't really have to tell you that. You should know that you just have to pay it on time in order to see a benefit from that credit card. But the thing that you need to keep in mind that most people don't know is that they are unaware that they need to keep that low balance on their credit report for that credit card, because that's what's helping them. And a lot of times people will get that credit card, go and max it out, and think that they're doing a good thing after they've maxed it out because they're paying it on time. But again, keep in mind that you want to keep that balance low. Ideally, you want to keep it under 10%, but at least keep it under 30% of the credit limit. So that's not how much you spend. Again, that's how much your balance is that you're holding on that credit card. Now, I've had some people to ask me, is it better to pay off the card in full or just to make the payments every month? Now, if you pay it off in full, that will help you to avoid interest. But in some instances, to keep credit cards active on like those retail accounts or something like that, depends on where you got the credit card from. You might have to keep spending money eventually here and there in order to keep it active. But if you pay off the balance in full, you pay no interest on that account, as long as you do it within the time frame the company allows you to avoid interest, which is usually anywhere from 23 to 30 days. Now, you also have the option of just paying the monthly bill monthly. Of course, you'll be paying interest on that balance, but if you're paying the monthly minimal with a little bit more above that, then you're at least paying it down faster, so it's not as much of a balance there, and you're paying it on time too. So of course, that's the most ideal thing. Either one of those methods you can use. It doesn't really matter. It just depends on how you feel about the interest that you'll be paying, because neither one is going to help your credit score any more or any faster. It's really about paying it on time and keeping that balance low as far as the percentage. Now, if you follow those steps with the credit card, keeping the balance low and paying it on time, then you will see a great benefit to your credit from using these methods. And also, I've heard people say that, what if I make more than one monthly payment in a month? So making 2 payments or 3 payments in a month versus the 1 payment that I'm supposed to pay, will that help boost my credit score faster? Just so you know, that's a myth. That won't help your score in any way. The credit score calculation is just looking at if you paid it on time and if your balance is low. So hopefully this gives you help and clarity on what you need to do in regards to building credit using a credit card, and why it is the fastest way that can help build up credit for you, as long as you have dealt with any negative information that might be on your credit report before you start building credit. Now, if you need some options for some credit cards that you can use to start building credit, check down in the description and you'll see I listed a few options for you to help you on your journey of building credit. Now, if you enjoyed this video, make sure you hit the thumbs up to like it, subscribe to the channel, and turn on notifications so you'll be notified of any new videos I drop just like this one. I thank you for sticking around to the end of the video, and I'll see you next time.